Welcome to the Blue Collar Wealth Podcast. This podcast reflects on the work, money, and the lives of blue-collar business owners. Blue Collar Wealth expert Darryl Smith discusses the day-to-day obstacles blue-collar business owners face as they pursue a better life, career, and wealth. And now, on with the show.
Hello and welcome to episode number 8, Estate Planning for Blue-Collar Business Owners. Hi, Darryl. How are you doing this morning?
Matt, I'm doing well. How are you?
I am doing well myself. So why don't we start off by you giving us a general overview of what happens when someone passes away and how their estate gets settled.
Sure, Matt. A lot of times when people think about estate planning, they're thinking, the wills and powers of attorney. And essentially when someone does pass away, that's what we do. We review these documents. But really in the past podcast, we've talked a little bit about how decisions are made with both emotion and logic. And the logic part of estate planning is really kind of dry and it's straightforward. It's, here's the documents that we need, and we'll go over those. But we're going to talk about the reasons and the purposes behind these documents and really the thought that goes into the details of those documents. And that's really what I want to focus about today.
Well, let's talk about, so this is going to be, a lot about emotion here. How do you even begin these questions? So what is one of the big questions that you ask your clients when you're just kind of beginning this process?
Well, you think about estate planning, for example, you think about your family, you've got your children, and we think on our lineage, it really is about our kids and our grandchildren and everything else. But if we go the other way and we think about our parents, grandparents, and even further back, a lot of times in a conversation with clients, I'll ask them, tell me your grandparents' name, and then they can do that pretty easily. And then I'll go back a little bit more and I'll say, talk about your great-grandparents. What did they do? What was their careers? How did they build their wealth that really affects you today? It was passed down. And it's unfortunate, but a lot of times people don't even know the great-grandparents' name. They maybe give me a first name, but that's about it. So really estate planning is about legacy. It's about where we came from, what we've done during our lifetime, and what we want to pass on to other people aside from just our money.
So give us an example of something you can pass on besides just your money.
Well, part of that, planning process, and again, I want to focus on the other side, is when we talk about creating a love letter to your family. And a love letter is essentially a statement of who you were, how you grew up, what you've learned along the way, what advice you'd like to pass along. We're in the age of Google, and a lot of times people will go, jump on the computer to learn something. But, if your parent or grandparent or great-grandparent had said, here's some things that happened to my life, and here's how I dealt with them, overcame them, that's going to have a lot more impact than what you're going to pick up from a stranger on the internet.
Absolutely. Now, we do need to spend a little bit of time talking about the documents. So what are some of those documents that we need to be aware of?
Well, everybody's familiar with a will, and a will is basically the process there is that we have to make sure that it's the most current version of a will. If there's been some changes in your life with divorce and new marriages, that type of thing, we have to make sure that those are updated. A lot of times people who own businesses don't think about a corporate will. A corporate will is really a directive of what's to happen to the company, who's to get the shares. If you've got partners, do they get the opportunity to buy into these shares? Does your share of the company go to your wife and or your partner or your spouse? And do these people end up running the company? And are the partners aware of that? So the corporate will, is really important to get that done. From there, powers of attorney, there are two types, personal and property. Personal is your health directive. This is what I want to have happen during my lifetime if I'm incapacitated due to ill health or accident. The slang term, unfortunately, is called the plug puller. People are in an accident and they're severely brain dead. This is the directive that allows the end of life to happen because that person's never going to be coming back. So it's an emotional document, but it's an important one. And property. Through accident, illness, or old age, if we are no longer able to pay our bills and manage our financial affairs, the property power of attorney allows someone to do that for you. Some of the powers of attorney are available through the Ontario government for free, but I always recommend you get them done through a lawyer.
Well, why is that, Darryl? Why wouldn't we use the free docs?
Well, you can certainly fill those out, and that's better than nothing. But however, when you're working with a lawyer, there's a lot of things that have to be taken into consideration, but also you have to double check what the lawyer is doing. I just worked with a couple recently in going through their wills and powers of attorney. I noticed that, they said that the wills were redone in 2015, which is great. And at the time, the lawyer said, well, you know what, your powers of attorney are done. We don't need to talk about those again. And I looked at them, and they were done in 1994.
Oh.
And what ended up happening is, the spouse had, the husband had 2 powers of attorney for property, and the wife had 2 powers of attorney for personal. So there was a mix-up, and I thought, well, maybe it's just a photocopy of something, but 2 photocopies. But all documents were original signatures, and all had stamps. It was an error, and that's been going on for 23 years. They thought everything was done properly, but it wasn't. So yes, work with a lawyer, but also make sure that everything is done properly.
Gotcha.
Just have a quick glance.
So at the end of somebody's life, there are a lot of emotions that happen to the people who are left here. But there are also a lot of financial things that you have to pay attention to. Would you mind walking the listeners through that?
Sure, and that can be kind of devastating, not only financially but emotionally for people, because as things start to get settled and they're dealing with the loss of a loved one, they're not considering that there's going to be fees. There's going to be probate fees, which in Ontario is up to the first $50,000 is $5 per thousand, and everything after that, it's a flat fee of $250 plus $15 per thousand. So on an estate over $1 million, it can be expensive. There are ways of passing assets beyond, outside of probate, outside of the will, and we can talk about that another time. But that's an important part of the plan. In addition to probate fees, there's executor fees. Who's going to settle the estate? That person's entitled to their fee, whether or not they take it, it's up to them. Legal fees, accounting fees, and then also funeral expenses and investment liquidation. A lot of times people have stocks and different types of investments that to sell are going to cost you money to get out of. Not all investments are like that, but also then there's investment real estate. That's another fee that they have to consider. So, when someone looks at their net worth and they think, okay, this is what we have, when you take away all those fees and expenses, it can be quite a lot to family, and they have to be prepared for that.
It can totally sting. Yeah, I absolutely I see that, and it's surprising. But there's another thing that can sting too, which is how do we make sure our kids are treated fairly?
That's a good question, and a lot of times, and this is where we're digging on the other side of the equation. We're talking about family, we're talking about individuals and how they're able to manage money. A lot of younger people, unfortunately, they may have addictions, they may have inability to manage money, they could be easily influenced, or there could be a disability in place. So we have to take those kinds of things into consideration for our planning, and that's not always done when you're dealing with a straight will or power of attorney. There's a lot of plans that have to be set up for these types of individuals. In addition to that, how stable are the marriages of our children? We want to make sure that whatever we give to a child is not going to be they're not going to lose half of it through a potential divorce. We talked a little bit about disabilities. There is disability savings plans in Ontario and Canada that will allow a disabled person to shelter up to $200,000 without losing any of their benefits. And there's another thing called the Henson Trust. That's something we can talk about as well too. That it just helps the individual have investments and such without damaging their investment or their benefit programs. In equalization strategies, the thing we have to consider too is sometimes I'll run across, I've got 2 assets, a house and a cottage, and both are worth $1 million. I've got 2 kids, simple math, one gets one, one gets the other. But what they fail to take into consideration is that the principal residence will have no tax whatsoever, whereas the cottage will. There's capital gains tax from the time it was built, and if it was been around since the 60s and they bought it for $5,000 and it's worth $1 million today, there's a lot of tax, and it's not an equal share. So they have to consider those types of things as well. Well,
you just hinted about the Henson Trust. Can we talk about some trusts now and when and if you should use those in your estate planning?
Sure. All trusts, in my opinion, I'm in a position where I can talk and I can educate people a little bit about them, but I'm not the one who will actually create the trust. That's where we're dealing with the lawyers, and they have to structure them properly. And the accountants help as well, too, because we want to make sure that the right assets are going into these trusts. So the 2 types of main trusts are a testamentary trust, and that's created in your will, and it takes effect at the time of death. So that's where your assets will be subject to probate fees, so we have to take that into consideration. And then the other trust is inter vivos trust, or also known as a living trust. And this allows you to transfer assets during your lifetime, and it offers a lot of greater privacy. I deal with people in a lot of small towns, high net worth individuals who really don't want people locally knowing what they have. A lot of times they will bank out of town just so people don't realize their net worth, because in small towns people tend to talk. Mm-hmm. So just privacy is important as well too.
How does life insurance fit into all of this?
I heard a long time ago, and it's a saying that you maybe you've heard as well too, is that there's two reasons to buy life insurance. One is you owe somebody, and the other is you love somebody.
Yeah, I've absolutely heard that before. Yeah.
Right. And the thing you have to remember about life insurance is that no one likes to pay for something, and that's an intangible, right? So it's even a little bit more difficult to deal with sometimes. But, you're basically renting dollars of life insurance for pennies in the premium. So you're getting a lot of value. And where it really comes to shine is that, at time of death, the family's going to be dealing with a lot of the emotion of losing a loved one. But there's also things that don't stop. Bills don't stop. The business doesn't stop. There's still things that have to get done. Life insurance is an equalizer. It allows you the opportunity to structure the company for resale or to deal with partners or to pay your household bills. It's there when money is needed most, and it comes in tax-free. So there's a lot of other benefits to it, but essentially that's why we buy insurance, and it allows us to deal with it. It's very, very flexible, and people don't realize just how much you can do with it.
Let's continue with that flexibility, though, Darryl. So what are some other examples on how life insurance can be used in these sort of situations?
For an example, a good example would be if a business owner's in their 50s and 60s, a lot of times they have adult children. They could be raising their own families, married, have a few kids, and they're struggling to pay their bills. They're building their careers at the same time, and kids are not cheap. They like to do stuff. They like to go do sports and that. So, how much are they putting aside on a monthly basis for their retirement? It could be RSPs or savings plans through work. So if each child is trying to put a couple $100 aside, one of the things that we can do, and we call this an intergenerational legacy planning, is we take the amount of money that they're trying to save and put into the stock market, and we actually have them either take over a parent's life insurance policy or buy a new one. And it's not for everybody, but if you think about the important part of it is that they're going to get a guaranteed payoff with the life insurance policy. It has nothing to do with the stock market. It's going to be a tax-free benefit, and it's going to come to them within 10 days. So as opposed to putting money aside on a yearly basis, if they can only afford a couple $1,000s each, you put that gift together, and they're a named beneficiary in the policy, so nothing can change. The only thing they have to do is pay the premium. So like I said, it's not for everybody because there's some emotion tied to it, but that's when we look at it from the other side and say, okay, at $2,000 a year, if you're putting that into your savings plans and you even make 10%, well, that's $200. That's great, but it's not going to be enough sometimes, and things tend to get more expensive.
Are there more things that we need to think about when it comes to estate planning?
There are, and the idea with estate planning is, we talked about the documents and the papers and that, but we have to be somewhat flexible, and it has to be updated because there's three real major unknowns. We don't know what age we're going to die. We don't know what our health is going to. Age we're going to die is important because it could devastate our assets, because number two is what assets are we going to have, because if we have health problems during that time, our health could devastate our wealth.
Yeah.
So we have to take that into consideration. And the third thing is that we don't know what changes are going to happen with government policy and taxation in the future. So how our assets are structured at that time is going to be really important, because these are the things we have to take care of our family as well too.
So at the end, there are a lot of decisions that not only should you make as the person who's potentially in the scenario passing away, but there's also things that you might want to communicate to your family about your big picture wishes. So again, a difficult conversation. How do you broach that subject?
The big one really is about your end of life. What do you want to have happen? How do you want to be buried? Do you want to be cremated? What happens with those ashes? Have you considered where that's going to be? Sometimes people will be in Ontario. Sometimes it would be what city, what country. There's a lot of considerations, and also what budget. There's no top end to how much you can spend for a funeral, but some people are down to earth people. They don't want the fancy funeral at the funeral home. They use a burial service that's under $3,000, and they want to spend money on family, a big barbecue or a big meal as a celebration of life dinner, as opposed to something that's big and formal. It depends on who they are as a person, is how they want their kind of end of life party, I guess you would say. After
you've sat down with somebody like you, Darryl, and have made these decisions, now comes what I consider the most difficult part of this entire situation, which is you have to communicate this to your loved ones. How do you do that?
It's a conversation. The last thing we want is to have someone damage relationships or not speak to each other again because they didn't know what dad wanted, or that's not what dad told me type of thing. So you have to really have that family meeting and just say, okay, here's where I want this to how I want this to happen, because it's important that if one child doesn't know, then they can create a rift, especially if they're involved in the business. That can be even a bigger problem. So that's where clear, decisive conversations are in place, and the documents to back them up are there as well too. There should be no surprises.
Okay. I like that. No surprises. And you have some resources for them to get started on this, correct?
Right. The first step for blue collar business owners is to go to my website, synergylife.ca, and just download the 10 tips to maximizing blue collar wealth. Essentially, it's a guidebook and some exercises in there that goes through and have you look at your business, who could run the business, who are the staff that you have on board. Do you need to bring more people in? You need to structure your business in a way that eventually you're going to sell it. Unless you want to be in your 80s running your business, a lot of times people will say, okay, you know what? Within 10 years, I want everything done. I want my money and my investments, and I want to go and do my own thing with retirement. I want to deal with clients anymore, customers, or any other hassles. I just want to be able to do that. But so whether you're playing for your estate or you're playing for your retirement, it's the same package. It's the same booklet, and I think it's going to be very worthwhile for them to go through those exercises.
Well, thank you for your thought leadership today, Darryl.
Thank you, Matt.
We hope you enjoyed today's show, and please remember that the topics covered here today are for informational purposes only. Please discuss these ideas with your professional advisors before making any changes to your situation. To learn more about Darryl Smith and the Blue Wealth Business Succession Program, please visit us at synergylife.ca. From the website, you can download a free yet informative workbook, 10 Tips to Maximize Blue-Collar Wealth. You can also book a 20-minute no-obligation meeting with Darryl to ask any questions you may have.